Oh, hello everyone, it's Susie, Crypto Granny here. The date's the 15th of November 2022 and the time in Netherlands, Amsterdam time is 15:11 p.m. Got a lot to talk about today. Need to go through some crypto stats. Then we need to look at this theme of unemployment in the tech space. A lot of people are getting unemployed in the tech space. Plus we've reached 8 billion people apparently today. Also, we'll talk about FTX. A lot of people have lost a lot of money, a lot of funds, a lot of investors, a lot of startup and DeFi projects as well. Just some of the main news stories in terms of Alameda research and FTX front running and insider trading on tokens, which is illegal in other markets, particularly the equity market and the bond market. Then we'll talk about Binance and what they're doing with what CZ's doing, Changpeng Zhao, the CEO of Binance. We'll also talk about Musk. We'll talk about also Solana and just a few other stories like from Polygon, the World Cup coming, BCH, XRP, Nexo and Crow. And then if there's anything else that I've forgotten, I'll mention that as well. Hopefully I don't forget things. I've got notes all over the place at the moment. So just I hope I don't forget anything here, but it's all over the place. But anyway, let's look at market live coin watch market cap at the moment. It's 873.110 bill. Volumes at 38.41 bill. Liquidity's at 3.192 bill. Bitcoin dominance is 37.24. Bitcoin's at 16,929. Ethereum is at 1271. Binance 279. XRP up at 10% at the moment at 0.3878. Matic is at 0.95604 and Solana is at 1482, which is up higher a little bit. Now, just some of the news very quickly. About 38,000 traders got liquidated last night. They were obviously wrong. Only 90 million or so. Leverage in the market's about 0.32. That leverage has been cut back a little bit. Also, off the exchanges in the last week, 3.4 billion of Bitcoin was removed off the exchanges and people are putting them in their hard wallets. And we've always said to our clients, put all your coins and tokens in a hard wallet. Okay, because if it's sitting on an exchange, you don't own your coins or tokens. Someone else owns your custody, okay? So if you've got money, say if you had all your money sitting on FTX, for example, and it's gone broke, then you've actually lost your coins and tokens. So you must have those in a hardware ledger. I'm saying to my clients, the best one is a ledger, I think Ledger Nano X or S or SecureX. But there's a couple of others out there. SafePal's gone up quite a bit. They went up about 46% overnight to 0.71334. Also, CZ from Binance suggested another one called, what's it called? This other one that people are getting into, Trust wallet as well. And that went up overnight, up about 8% to about $2.41. Plus, Taser said they've had a lot of surges in sales, and you'll see that also with Ledger Nano S, rightly so, because people need to keep hold of their own coins, their own custody. If you don't do that, you don't actually own your own coins, okay? Also, I want to mention what's very interesting at the moment is the futures price for Bitcoin and Ethereum are much lower than the spot Bitcoin price and the spot Ethereum price. And it's quite wide at the moment. Spot is a lot higher by about $250 for Bitcoin. And spot is high for Ethereum by about $18. And I've never seen it that wide before for a while. And it tells you that the professional traders, the big traders, are selling more futures in the market at the moment than buying this, than obviously selling Bitcoin physical. So Bitcoin physical is going up because people are buying it, but the big players in the market are selling futures and derivatives. That's why you've got such a difference between the Bitcoin derivatives price and the Ethereum price compared to the physical price of both Bitcoin and Ethereum. So I keep an eye on that, and that's fairly important as well, okay? So just to keep an eye on that. Also, let's just talk about some of the news, and obviously the biggest news story out there is FTX, but I will cover that in a minute. Just want to mention some unemployment figures out there at the moment. We heard that Amazon is also getting rid of people in the tech space, and they're going to get rid of about 10,000 people. Now, to give you an idea, Amazon had so many people. December 21, they had 1.6 million people as employees, and 2019 they only had 798,000. So these guys look like they're going to get rid of quite a lot of people. I mean, if they've bulked up to that much in 2 years to 1.6 mil, and they said they're only getting rid of 10,000 people, I suspect it's going to be a lot more than that. Was corporate jobs, marketing type jobs, and sales jobs, because sales are also down. But it looks like, Amazon said there is a slowdown, there's a recession, people aren't buying as much, and, we're going to have to get rid of people, right? And that's an indicator. When you look at that, that's a consumer sentiment indicator, right? People aren't buying, it means they don't have any money, right? No money whatsoever. If they're not buying Amazon, then there's a big problem with retail spend in the US, okay? Which means people just don't have the money. And we see this slowdown everywhere. According to some stats, US-based technology companies have literally got rid of about 100,000 jobs this year, and that's still rising, okay? And it tends to be, in that middle management area as well. We see that also with digital asset manager Valkyrie. They've just laid off another 30% of employees because, in sales and marketing, simply because, they're just not seeing the sales. We've seen it with BlockFi, we've seen it with Coinbase, we've also seen it with Digital Currency Group, we've also seen it with Twitter and a lot of other technology groups as well, okay? So we're seeing it right across the board. Silicon Valley particularly, a lot of Indian techies have been sacked. They flew over from India for a job at, say, Meta or something, and they'd been sacked within 3 days. And, the big problem is they've got to get back home from US to India because they have these H-1B visas, which only go for 60 days. So, we're seeing a lot of sacking out there and everything else, which is not great. And we're seeing it, within cryptocurrency industry itself, but also within the tech industry and the hedge fund manager industry of cryptocurrency. And it's not surprising because a lot of people lost money with FTX, okay? A heap of people lost money with FTX. Now today, apparently, we've gone to population of 8 billion people, which is quite amazing, the 15th of November. In 1974, just as a comparison, population was 4 billion people. So the population doubled since 1974. And apparently it's estimated roughly about 9% in the world of people own cryptocurrency. And it's Asia that's buying more cryptocurrency than anyone else. And the top Asian country to be buying cryptocurrency is Vietnam, of all places, which I find quite interesting. So, it's interesting what we see. Certainly, Vietnam has a lot more people buying crypto than anyone else. And we're seeing it in Turkey and everywhere else, for example, in parts of Asia and some of the Middle East as well, which doesn't surprise because their currency is terrible. Like the Turkish lira is literally, going down 122% against the US dollar in less than a year, okay? So what else we had? We had Twitter, Elon Musk sacking people on Twitter, which is sort of weird. We also had Sam Bankman-Fried yesterday. I couldn't work out what was going on, and there's been a lot of stuff in the paper, in notes today and news stories. He was twittering on Twitter, and God knows what anyone knew what he was talking about. Sam Bankman-Fried, the first thing he says is what? Then he's like H or something, and no one understands what this guy's saying. And then he goes, what happened? And it's almost like he's trying to make out that he's lost his memory. But I can tell you something, what's happened with FTX and Sam Bankman-Fried and Alameda research was just absolutely fraud. And no one can hedge for fraud, okay? That's the thing. When you invest in companies and you look at management and you think they're doing the right thing, and Sam Bankman-Fried looked like he was doing all the right things, going to the regulators, even talking to Gary Gensler, keeping them all informed and everything else. He's just, obviously, and with his Democrat donations, obviously he thought he had an inside track to the government per se, but he's certainly caused an amazing lot of damage. I've got to tell you that. Some people are still coming out and saying we've lost a lot of money with, FTX. BlockFi came out. There was a rumour yesterday that BlockFi had a majority of its assets on FTX. They did come out and say, look, we do have a loan with FTX. We lent them $400 million to the FTX US company, which is, by the way, is under Chapter 11, okay? So, Any of the assets that FTX has with other companies are being freezed at the moment, like Pazos. The 19 million sits with Pazos in PAXG, and it's FTX's, but it's actually frozen. We're seeing that as well. Also, there was a hacker that hacked into FTX to top it off, 600 million. Most of it was altcoins as such. But, they've certainly done a lot of damage, that's for sure. Excuse me. We find that FTX may have 1 million creditors, which is just unbelievable. The Solana Foundation came out and said they had shares in FTX, and they were holding FTX tokens, 3.4 million of FTT tokens and Ethereum. Also, we found out that FTX and Alameda had invested in Solana, and they hold something like about 58 million of Solana shares. Solana coins, I should say, which are not going to be unlocked until 2028. So, in other words, Solana has got more money from FTX than FTX got from Solana, okay? And I think that's quite important. People have been selling Solana, but the bottom line is Solana got more money out of FTX than the other way around. Also, as I said, a lot of DeFi projects and startup projects have been hit by FTX. A crypto hedge fund, Galois, Galois, has $100 million stuck at FTX, allegedly. Investor Mechanic Global also lost money. We don't know how much. Also, crypto platform Matrix portfolio has exposure to FTX. We don't know how much. 80 investors or so. Paradigm Network, a venture capital fund, has exposure to FTX of $290 million. And as you know, Sequina also had exposure to Sequina Capital of $213.5 million, which they wrote to zero. Also, Ontario Teachers Pension could lose $95 million. And, it just goes on. There's another platform in Hong Kong called HBit. Some people on Twitter were calling it Hubi, but it's not Hubi, people. It's HBit, HBIT. They're owned by New Huo Technology. HBit is, excuse me, is a Hong Kong platform. Excuse me for a minute. I need some water. Also, 13.2 million belongs to HBit clients, which is not great. Another fund manager, US fund manager, said on Twitter yesterday they've lost a lot of money, and this was called Ikei Assets. And they said they had a large majority of their assets, their crypto assets, on FTX, $25 million or something. Now, it's not great when a fund manager has a large amount of their assets on an exchange when they don't self-custody themselves. That's extremely dangerous because this fund manager, basically has a huge counterparty risk to FTX, the exchange. And it's almost like giving someone a loan for $25 million plus from market reval, okay? The fact that FTX was holding IKJ assets, it just shows the risk management policy of IKJ was not very good, okay? Because they had all their assets sitting with one counterparty, which is quite dangerous, okay? It's like everything, you need to diversify across the solid big exchanges. And I'm surprised that these guys didn't have their holdings in Binance and other larger exchanges that are more regulated, obviously regulated, and they were larger than FTX, okay? It really surprises me. So what it means is a lot of people have lost a lot of money. Now, don't forget, FTX bought Voyager as well, and apparently there's unauthorized FTT sitting on those assets as well. So it really hit quite a lot of people, and it's not a great story, and it does a lot of damage to the cryptocurrency market per se. Absolutely. So this is why Changpeng Zhao from Binance has come out and said, look, we really need to do something with cryptocurrency. This FTX thing should never have happened, and he's absolutely right about that. Even though FTX was talking with the regulators, Changpeng Zhao from Binance, the CEO, said we need to talk to the regulators globally. We need to have a recovery fund, the market. We need to have proper rules and regulations in place where people are reporting their proof of reserves, including liabilities, to the SEC. And Changpeng Zhao is completely right about this. It's about being absolutely transparent. And that's something FTX and Sam Bankman-Fried were not, okay? Because there was fraud. Now, with fraud, you cannot hedge against fraud. Yes, we look at management, we look at everything, but honestly, you can't hedge against fraud, that's for sure. There, and that's the thing. The SEC should be looking for that. Absolutely. So Binance have also come out and said we want a market recovery fund, like a national government fund or a national funding fund. The stock market has it, the equity markets have it. They certainly have it in Australia. And also, there could be some government control where, there's like 100,000 deposits were guaranteed by the government with banks in 2008. It could even get to that stage where the government does that to safe haven investors' cryptocurrency money, particularly when it's retail investors, right? Professional investors should know better. Certainly the fund managers that have lost a lot of money, and these hedge funds, I'm just amazed that they had all their assets sitting on one exchange. You would not do that anywhere. We certainly don't even do it as, retail clients. It's just it's madness, seriously. You have all your money sitting on one exchange, all your coins and tokens, and you don't own them. It's completely crazy. And so therefore, that hedge fund actually went bust, okay? Now, Binance, as I said, has proposed this market recovery fund so that there's anything that ever happens again, like another FTX or something, that people can use this fund to provide liquidity, to help the exchange out, or whatever it might be. So OKEX says they're going to join that fund. They're going to put in $100 million. Justin Sun from Tron said he's going to join it with Hubie and Polony next. They're still waiting on Qcoin and Gate.io and a few others. Coinbase haven't said anything at the moment, but I think this is a very good idea, and I think it's absolutely needed, okay? There is no doubt about that. You've got to have these sort of funds. The stock market has them, and we certainly have them in Australia, okay? So that's for sure. So also CZ is in Bali, Indonesia, at a G20 meeting where he talks to G20 leaders about the regulation of cryptocurrency, and it needs to be done and work with regulators globally. And that's a very big tall program, that's for sure. But with regulation, you'd assume there'd be absolute transparency, where, like the banks, the cryptocurrency exchanges would have to report to the SEC and the regulators on a daily basis for their proof of reserves and their mark-to-market liabilities, okay? And that was the problem with FTX. They were using their own FTT as collateral against their debt and against the client's holdings, which were their liabilities. So if the client's holding Bitcoin, for example, Bitcoin only went up or down 3%, but if they've got FTT against that, FTT went down 96%, and yet they owe the clients Bitcoin that might have gone up. You see what I'm saying? And they spent clients' money. And as you know, Sam Bankman-Fried transferred $10 billion to Alameda Research to try and keep FTT up. It's even more than that, because it turns out that people are now looking at their on-chain data records for Alameda Research and FTX, and apparently Alameda Research was doing front running and basically buying tokens and coins illegally, insider trading, which is illegal in other markets, before clients in the retail market would get to buy those coins and tokens. So in other words, they were front-running tokens and coins before the retail market was privy with that knowledge, of public knowledge. And you should not, that is absolutely insider trading. And under the SEC rules and regulation, if you do that in any other market, the bond market, the equity market, the currency market, the high yield market, you will go to jail, and you'll go to jail for a long time. So FTX was doing a lot of things wrong. They should not have been using clients' money. Another thing too, it's very important to have clients' money separated from the assets of the cryptocurrency exchange, okay? That's very, very important. Cryptocurrency exchanges should not be using client money. They should be in a silo, in a cold wallet, completely out of the reach, of the cryptocurrency compliance. They should not be using clients' money. That's a fact. Now, I'm amazed that this Bytebit in Hong Kong, transferred 13.2 million of clients' money, and 4.5 million was their own. They should not have been sending that to FTX, because 13.4 was clients' money. Clients' money should sit with the exchange in a separate area completely. And if it was the assets of the exchange, then that's fine. The assets of the exchange, they can do whatever they like. But if it's liabilities, which are clients' money, it's illegal, right? It's certainly illegal in other markets to do that. And Sam Bankman-Fried, was committing very illegal things within financial markets, okay? In regulated financial markets, for insider trading and front running and using clients' money, you can go to jail for a long time. It's akin to, Bernie Madoff, right? It's akin to that, seriously. And it's, this is where the regulators need to come down really strict on owners of cryptocurrency exchanges to make sure that clients' liabilities are separate to the assets of the business. Now, clearly the assets of the business are going to reflect, they should reflect the liabilities of the clients, okay? So what I mean by that is, for client, you're a client, you go to Binance and you buy Bitcoin at 16,900, then Binance on the other side of their assets should buy Bitcoin at the same time, right? You can appreciate if they don't, then they're going to have a trading risk to owing you, the client, Bitcoin when you draw it down or take it off the exchange, okay? So if Binance didn't buy Bitcoin at 16,900 where you bought it, they have a trading risk and a market price risk to you on the liability side, right? If they buy another asset over and above Bitcoin, then they're going to have basis risk. So they bought Ethereum over and above Bitcoin, you bought Bitcoin. They would want Ethereum to outperform Bitcoin because they had basis risk in the two cryptocurrency coins, okay? The biggest problem with FTX is they had all their assets as being their own token, FTT, which got sold down dramatically. So one stage, say the assets are 96 million, got sold down to 1 million, but on the liability side, what they owe clients, right? Clients have all different, they buy Bitcoin or Ethereum, whatever. Those liabilities at the time may have been worth 96 million too, but because FTT went down so quickly, what happens is, on the asset side, they only had $1 million, but on the liability side, they still owe clients 96 million, as you can see, right? Because FTT kept going down. And that was supposed to be their asset as collateral for the borrowings from clients. I hope that's clear, but, this is just an absolute no-no in terms of risk management, in terms of everything, right? And certainly what they were doing was illegal, and it just seriously bad news. And that's where the regulators should be there. I mean, there's talk that, Gary Gensler had a lot of meetings with Sam Bankman-Fried and knew about what was going on with the Alameda research. So it puts him in the chair too, if this all goes to court and everything else. It's a shocker, I've got to tell you that, an absolute shocker. Anyway, other news on the day is Nike is set to launch a Web3 platform called Swish. It's in beta mode, and they're using Polygon Matic's mainnet and layer 1 blockchain, which is great for them. Nike intends to create digital collectives by 2023, and it'd be things like, digital sneakers and these sort of things, digital whatever Nike does, right? And, they might even digitize, I saw something today about someone bought Steve Jobs' sneakers for $200,000 or something. You can create an NFT out of that. But either way, Matic is doing very well, and the addresses, Matic is increasing their addresses all the time. It's a coin that's done extremely well, and I continue to believe Matic will do very well going forward. I believe it's an absolute blue chip cryptocurrency, and we hold that within our cryptocurrency investment portfolios. Also, St. Kitts Nevis, a little island where I think Roger Ver lives, they're talking about going to legal tender Bitcoin Cash next year, which surprised me because most people go Bitcoin, but these guys want to go Bitcoin Cash. Also, XRP, they came up with a new client, and this client is MFS Africa. And apparently it's one of the largest mobile money payment systems in Africa, and they're across 35 different countries. And as you know, a lot of people in Africa have mobiles, but they're not banked. So that's why XRP and Ripple are very, very clever, because they're in the right area, right? And this crowd has about 320 mobile wallets, and this is a great opportunity for XRP. They're using on-demand liquidity, in other words, using XRP, and that's a great story. Now, also, Judge Torres has granted motions to file the Amici briefs on behalf of Ripple, which are friends of the court to Ripple. Apparently there's 16 different briefs that have to be filed, and they all have to be filed by the 18th of November. And it includes XRP holders, Coinbase, CCI, Valhill, and others, okay? So that's good for XRP. There was some FUD out there on Twitter and Sky News that there was a settlement today, the 15th, but I don't think that's going to happen. I think that was just a bit of FUD, guys and girls, to be perfectly honest. Nexo actually came out as well and said they have no exposure to FTX or FTT at all, okay? And I think that was a great story. They have their own custody, they're regulated, very, very smart operation, very, very smart indeed. Before I forget, Brad Garlinghouse was on Twitter yesterday and said Ripple has no debt and we have over $1 billion in the bank. So XRP, you know, what a story, quite a credible story, putting on clients all the time, increasing this ODL product globally all over the world, just fantastic. XRP, as I said, is very, very cheap and shouldn't be, you know, at 38 cents. It should be so much higher. Also, there was a story about Crow, whether there was, you know, contagion from, you know, FTX. Crow said CEO Chris Mazalik said that they only had exposure to 10 million of FTX out of, you know, it could have been $1 billion. He said that we have a very strong balance sheet. You know, we have 70 million clients. You know, we do all the right things. Our reserves are a minimum 1-to-1 with the client liabilities. You know, they do not trade with the client's assets, and they reflect the client's asset on their asset side. So, you know, he was out there doing a meeting and, you know, asked me anything type thing. And he basically said, you know, look, you know, we are strong. So we can only be, you know, and he basically came out with, you know, proof of reserves, which are going to be audited, you know, in the next 30 days. So we can only believe what someone says. Certainly in the equity market, the fixed interest market, any other market, if a director or CEO says this in a regulated market and they say everything's fine, everything's good, and it's not, they will literally go to jail and lose all their assets, okay? That's why regulation is so important, okay? So, you know, that's what he said, and Crow did bounce overnight. It's extremely, extremely cheap, seriously. I mean, the World Cup's coming up, and two coins that should do really well at the World Cup, Chiles and Crow, okay? They're both extremely cheap. I regard them as blue chip cryptos. Obviously, you know, I don't know whether fraud's been done. No one can hedge against fraud, okay? No one. Unless you've got an insight into someone, right? You know, Amelda Research or something. If someone was working there and told you this happened. But, you know, we can't avoid fraud. Generally, you know, clearly, if someone's, you know, the management or a CEO of a company and their father's a professor at some university, a lawyer professor, like Sam Bankman-Fried. I mean, seriously. And the guy was, you know, came from MIT and everything else. You've got to wonder, you know, where was his ethics? Seriously, because he's cost, you know, even the Ontario teachers' pension, $95 million. And this is, you know, this is a teacher's pension, right? It's got to be paid out to teachers when they retire. So it's an absolute shocker, I've got to say. Absolute shocker. But anyway, let me just check to see I've got everything here. Oh, yes. Last week, Donald Trump said there was going to be something announced today, the 15th of November. So maybe he's going to announce, potentially, that he's going to run for presidency. I don't know, but keep your eyes out on that. Let me just see if I've forgotten anything here in my notes. Oh, yes, another thing too. The latest US report is coming out, and this is fascinating. I find this fascinating, for UFOs, unidentified flying objects, right? And this report apparently is going to be very interesting because military personnel are on record for saying they've actually seen UFOs, right? There's been thousands and thousands of sightings of UFOs in the last couple of years with people using their mobile and this sort of thing. And there is absolutely, at least 20% of unexplained sightings of what this vehicle is or whatever it is, this flying saucer thing. And no one has an explanation. And this is even military personnel on record saying they've seen UFOs. So what's going to be interesting about this with the government is how much information are they going to release to the public? Because over the years, I don't know whether you saw Netflix, there's a great documentary on this UFO stuff. Over the years, the governments have not told the people the truth about anything, right? Not told the people the truth about UFOs or anything. And I'm dying to see this report because I think it's going to be very interesting to see what this report says in terms of UFOs. I mean, I think there's a possibility. I mean, the satellites out there, thousands and thousands and thousands of different planets. I mean, one would have to think, seriously, are we just the only ones there, you got to think about that. But anyway, interesting in itself. And just a side note, again, another one, the Hong Kong housing market, which is, Hong Kong's renowned for having the highest prices in Asia and generally all over the world. Prices of properties are actually falling. And, they're on a 9-year low. And apparently the transactions are down by 60%. And even in the luxury home area, sales are incredibly weak. And this is a reflection also of parts of Asia. The Australian market's certainly down by at least 10 to 15%, depending on which suburb you're looking at. New Zealand's down, Canada's going down, and we're even seeing that in the US. And this has been brought about by the over rate hiking cycle of the central banks. When I look at information, and I've mentioned all the IT places that are losing, clients, even, Gemini Trust is getting rid of clients and Valkyrie and all the big tech firms. To me, this is the start of higher unemployment. Inflation's still going to stay very, very high. People are not saving and they're not spending money at Amazon. And again, I still believe, honestly, that the Fed has over rate hiked and other central banks have as well. And I do believe the market will start pricing in easing for next year because people, when you look at all the forward stats and consumer sentiment and the lack of retail spend, and we're finding that even in China because of COVID and the lockdowns over there, people, itinerant workers that work in China, are basically losing their jobs as well. It's really bad. In industrial metropolis of Guangzhou, there was compulsory lockouts. People are rioting against the police and everything. There's food shortages. Prices are sky high. People can't, find jobs. If they're not working, they're not eating. There's a pressure cooker. Literally 20 million people in China, and they've had this outbreak of COVID again, and the stats for COVID are still rising, 640 million, going up about 3 million a day. And then when we look at the industrial production figures of China and their gross domestic product and everything else, it's an absolute shocker, okay? Things are weak in China, very, very bad. And if you look at Japan, they just had a GDP figure come out, and that GDP figure was down 1.2% for the third quarter 2022, right? Now, that's a negative GDP, right? The cost of living is going through the roof, and yet gross domestic product, the growth in the system, creating jobs and creating product to sell overseas is actually going down, right? And we're seeing this globally, okay? So unemployment is rising, people are losing their jobs, prices are through the roof, COVID's still in play, and I do believe the central banks of the world have just over-tightened, okay? In other words, raised interest rates too high, too fast. We still see a 30-year fixed mortgage rate in the US around 6.66%. It has come down from over 7%, but, that thing's gone up 3 times, right? And people are bleeding. It is killing people. So I do believe that next year we're going to see, probably more than a recession, and or depression. I believe it's more a depression myself, but I see those things before anyone else does, particularly economists. Anyway, guys and girls, that's enough of me. If you've got any questions, please do come back to me. Thank you very much, and I'll talk to you soon. Thank you.